Welcome back to Investing Talk Podcast. Today, we're really digging into Plus Therapeutics. It's a clinical stage biotech, and it's been showing some pretty explosive momentum lately, both commercially and, with its drug pipeline. So the big question, the one we're tackling, is pretty critical. Is this stock actually a good buy right now, especially given that recent surge? Or is the risk, maybe particularly around those regulatory deadlines, still just too high?
Yeah, our goal here is to quickly break down the company's recent clinical wins, kind of look at its financial situation, and importantly, those upcoming risks and catalysts. We want to give you a clear picture, something that goes beyond just the headlines. And before we jump in, if you find this breakdown useful, please do remember to subscribe, like the video, comment below. It really helps us out. Oh, and definitely, if there's a specific company you want us to look into next time, just drop the name in the comments. We definitely read those. Okay, let's unpack this then. We really have to start with that price action, the sheer speed of it. Late September, the stock just, boom, surged over 48% intraday.
That kind of jump, it's not minor news, right? It suggests something fundamental might be changing about the company's risk profile. What exactly lit the fuse on that massive jump in Q3?
Yeah, it was really a potent 1-2 punch, you could say. Validation coming from two sides at once, one commercial, one clinical, both hitting different parts of their business model almost simultaneously.
Yeah.
So first, the commercial win. Their diagnostics subsidiary, that's CNSide Diagnostics, they locked down a national partnership with United Healthcare.
United Healthcare, wow, that's big.
Huge. It kicked in mid-September, and it extends coverage for their CNSide CSF tumor cell enumeration test. That's the lab test. Suddenly, it's available to over 51 million insured Americans.
Okay.
And this is key, right? Because it moves CNSide from being maybe a niche diagnostic tool to something much more widely accessible. It really enables broader clinical use and, importantly, starts generating potentially predictable revenue.
That is significant. Having that diagnostics piece bringing in revenue while the main drug pipeline is still developing, well, that gives them a bit of an operational cushion, doesn't it?
Exactly, a much-needed cushion. And then on the clinical side, you had their lead candidate, REYOBQ. That's the rhenium-186 obisbemeda. They released positive phase 1 results. This was in treating leptomeningeal metastases, or LMM. It's a really, really severe form of CNS cancer, notoriously difficult.
And the data?
The data looked extremely encouraging. 76% of patients showed radiographic responses.
76%. That's a really high number. But hang on, this was phase 1, right? How many patients are we actually talking about here? We need to keep that sample size in mind.
That's a really crucial point. Yeah. Absolutely. It was a small dose escalation phase 1 trial. So yes, we absolutely have to be cautious about, jumping to conclusions about phase 3 success based just on this.
Okay.
However, the data points themselves, they are compelling, especially when you compare them to the standard of care for LMM. Just for context, LMM is when the cancer spreads into the cerebrospinal fluid, the fluid around the brain and spine.
Right, notoriously hard to treat because of the blood-brain barrier.
Exactly.
Yeah.
That barrier shields the area from most standard chemotherapy, so patients decline very rapidly. So against that backdrop, the survival numbers are what really got the market excited. Beyond just the scans showing responses, 87% of patients actually showed clinical improvement by day 112.
Clinical improvement, okay.
And here's the kicker. The median overall survival hit 9 months. Historically, survival for this specific cancer type is often measured in weeks, maybe closer to 4 months on average.
Wow.
So 9 months. That's more than double the historical average. That kind of result significantly de-risks the potential of REYBQ, at least in the market's eyes.
And that's where the market reacts.
Okay.
This combo, the clinical and commercial news, it clearly triggered some very bullish sentiment from analysts. D. Boral Capital, for instance, they just reiterated their buy rating with a really aggressive 12-month price target. What was it, $9.01?
$9.01, yeah. That kind of target definitely suggests the analyst believes, meeting that Nasdaq compliance hurdle is almost a foregone conclusion.
It screams confidence in the pipeline.
Massive confidence, no doubt. But, before we get totally swept up in the optimism, let's maybe peek under the hood a bit. Look at the actual fundamentals.
Good idea.
Plus Therapeutics is still clinical stage, but its financial path is, surprisingly robust for a company at this stage in this sector. Their revenue for 2024 hit $5.82 million. That was up 18.54% from 2023. And that's important because, like we talked about, most of this revenue is probably coming from that CNSide diagnostic platform getting more use.
Right. It's not just grant money, it's actual product or service uptake.
Exactly. Real growing adoption.
And then there was the Q2 2025 update. That was the headline grabber on the profit and loss statement, wasn't it?
Yes. Q2 showed a pretty dramatic turnaround. They reported net income of $5.2 million, which looks amazing compared to the $2.9 million loss in the same period the year before.
Huge swing.
But it's really important we clarify where that income came from. A big chunk of it was attributed to a gain on derivative instrument valuation.
Okay, derivative instrument valuation. Can you break that down a bit? Simplify it for listeners who maybe aren't deep in biotech finance jargon?
Sure. In simple terms, this isn't profit from, like, selling drugs or services. It's usually a non-cash accounting gain. It relates to the value of things like warrants or convertible notes the company issued in the past.
Ah, okay.
So as the stock price goes up, the liability tied to those instruments often goes down on paper, and that creates this technical accounting income. So yeah, it signals maybe a healthier balance sheet, definitely increased market confidence.
Yeah.
But you shouldn't mistake it for, core operational profit.
Gotcha. Still, accounting aside, how does the actual balance sheet look? Cash on hand, debt.
It looks pretty clean, actually. As of the end of June 2025, they had $11.3 million in cash and cash equivalents. Very little debt. And their liquidity looks strong. The current ratio was over 2.
So they have some runway.
They do. Enough runway, hopefully, to hit those next crucial clinical milestones.
That liquidity definitely helps. But, in biotech, cash just buys you time, right? What's the actual barrier to entry here? What protects that ORI-YOBQ platform if, say, a bigger player wanted to copy the tech? What's the moat?
The moat seems pretty substantial, mainly because the technology is genuinely first in kind for several of these specific CNS cancer types. The REYOBQ platform uses rhenium-186, which is a potent radionuclide,
Okay.
and they deliver it locally using something called convection-enhanced delivery. This effectively gets around that blood-brain barrier we talked about earlier.
Ah, bypassing the barrier.
Exactly. This local delivery system, which is protected by some robust patents, lets them concentrate the drug right at the tumor site. This minimizes systemic toxicity side effects in the rest of the body while delivering a really high radiation dose where it's needed.
So it's a fundamentally different approach than standard chemo or external radiation.
Fundamentally different. And they're targeting huge unmet needs, like recurrent glioblastoma, LMM, pediatric brain cancers. Plus, they have orphan drug status and FDA fast-track designations, which help speed up the development and review process.
Okay, this all sounds very promising, but it does raise a critical question. Given how volatile clinical trials always are, and you have this strong buy rating pricing in massive success, what are the main, maybe even existential risks an investor needs to be watching like a hawk over the next few months?
Yeah, the most immediate, the one you just can't avoid, is that regulatory compliance issue, Nasdaq. The company got an extension to meet the $1 minimum bid price rule.
Right.
But that deadline is coming up fast.
Right.
November 12, 2025. It's looming.
Why is that $1 rule such a huge hurdle, psychologically and practically? It's not just about the threat of delisting, is it? There's more to it.
Exactly right. Failing to meet it risks delisting, obviously, which is catastrophic. But the real damage often happens even before that. Many large institutional investors, mutual funds, endowments, pension funds, they have strict rules. Mandates that literally prevent them from holding stocks priced below $1 for very long.
So they become forced sellers.
Forced sellers.
Yeah.
Regardless of how good the science looks or who's running the company. If Therapeutics doesn't get back above that dollar mark and stay there, these big funds have to dump the stock. So meeting that $1 threshold is absolutely essential for restoring institutional confidence and just basic market liquidity.
Okay, that's the big immediate one. What else?
Well, beyond that, you've got the classic biotech risks. It's still a pre-commercial company, right? So revenue, long-term, depends entirely on getting FDA approval. If any of these ongoing trials, especially the key phase 12 ones, don't hit their endpoints, the stock will take a massive hit, materially decline.
And dilution risk.
And dilution risk, yes. We have to highlight that. You look at the company's history, they've managed their cash burn primarily through issuing new shares, secondary offerings at the market, ATM offerings, that dilutes existing shareholders, weighs down the value of their stake.
That $9.01 price target seems to almost completely gloss over that dilution risk, doesn't it? I mean, isn't that baking an enormous amount of risk into the upside target, especially given how they've historically funded operations?
It absolutely is, which tells you the market consensus, or at least that analyst's view, is aggressively betting on one of two things happening. Either the company lands a big non-dilutive financing deal, think partnership licensing agreement, or they achieve the necessary clinical validation really quickly before they need to go back to the equity markets for more cash.
It's a high-stakes bet.
Very high stakes. Technically, the stock has recovered strongly. It's bounced over 200% off those summer lows, but you still see resistance levels around 0.88 cents and then again at $1.20. That shows you that $1 compliance hurdle is still absolutely front and center for traders.
Yeah.
So, okay, let's shift focus maybe to the immediate calendar. If you're watching this stock, you need to have these dates circled, basically, over the next few weeks. Laser focus.
Lay them out for us.
All right. First up, October 15th, 2025. That's the Q3 earnings release. This is critical. We'll get an update on cash burn, obviously.
Yeah.
But crucially, we'll see the uptake metrics for that CNSide platform after the United Healthcare deal kicked in. Is that revenue stream accelerating like people hope?
Okay, October 15th.
Next, the absolute crunch date, November 12th, 2025. That's the Nasdaq compliance deadline. TikTok.
The big one.
The big one. And then third, around November 20th, 2025, we'll get the institutional holdings reports, the 13F updates. This is where we see if the big money, the actual institutions, are buying into this bullish story or if they're still sitting on the sidelines waiting.
And we can't forget the clinical side too, right? There's potential news there as well.
That's right. Interim data from the REYO-BQ trials in pediatric brain cancers, that's also expected somewhere in that October to November window. So another potential short-term clinical catalyst to watch for.
Okay, so speaking of that bullish narrative, let's quantify the street sentiment again. It sounds exceptionally strong.
It really is. The analyst consensus remains a strong buy, and the average 12-month price target sits at $7.88. Now, if that target were actually realized, it represents an upside of over, 1,100% from where the stock is trading now?
1,100% upside. That's extraordinary. Are insiders and institutions actually aligning with that kind of target? Because often analysts can be way out ahead, and the insiders and institutions take a much more cautious approach.
Well, in this case, there is some alignment, which is encouraging. We saw insider purchases reported back in August that included the CEO and the chief medical officer buying shares. That's almost always a powerful signal, shows confidence in the near-term strategy from the people who know the most.
Okay, insider buying, that's a positive sign. Institutions.
And institutional interest seems to be picking up, too. ParkWest Asset Management, a notable fund, they initiated a 2.5% position in Q3. That shows some real institutional validation of the strategy. They're putting money behind the thesis.
All right, this takes us maybe into the more speculative territory, the rumors that are floating around, the potential upside kickers. We're hearing some unconfirmed reports, right, about strategic acquisition interest, maybe driven by that CNSide platform now that it has national reach.
Yeah, that's definitely part of the chatter. The idea is that with CNSide gaining traction nationally via the United Healthcare deal, it makes Plus Therapeutics, or at least that part of it, a more attractive target for larger oncology diagnostics companies.
Which kind of company would be the most likely suitor there, structurally?
Well, really, any major diagnostics player that wants to boost his footprint in the CNS, the central nervous system space, the synergy is pretty obvious, right? CNSide provides the diagnostic and the tracking tool, and then REYO-BQ offers a potential treatment.
A find and treat model.
Exactly. A larger diagnostics or even a pharma company could potentially integrate CNSide to funnel patients identified as high risk directly into their own therapeutic pipeline or related services.
And what about licensing deals? Any rumors there?
Yes. There's also industry chatter about potentially advanced talks for significant international licensing deals for REYO-BQ itself. Now, these are just rumors at this stage, but if a licensing deal did materialize, well, that would bring in crucial non-dilutive capital. Huge validation.
Okay, so let's try and pull this all together. What does this really mean for you, the listener, looking at Plus Therapeutics right now? The overall story, the investment thesis, it's genuinely compelling in parts. You've got accelerating revenue from diagnostics. You've got this unique, patent-protected, first-in-kind drug platform hitting massive unmet needs.
Right.
And you have overwhelming analyst conviction. But, and it's a big but, this is all happening against the backdrop of really high short-term regulatory volatility because of that fast-approaching Nasdaq compliance deadline.
That deadline really is the dividing line right now. You've got short-term traders trying to capitalize on the news flow, the volatility leading into November 12th. They're hoping to ride the momentum, maybe get it past that $1 mark and take profits.
In the long-term view.
Long-term holders, though, they're making a fundamentally different bet. They're betting on the science eventually winning out, on eventual commercialization of REYOBQ, or perhaps a strategic acquisition happening sometime over the next, say, 12 to 24 months.
Yeah.
It's a different time frame, different risk tolerance.
Two different games being played.
Two very different games. And, here's maybe a final provocative thought for you to consider, something to mull over. The sources we looked at suggest management is openly receptive to strategic review, to partnerships.
Okay.
Now, if, and it's still an if at this point, if that unconfirmed rumor about a major licensing deal, maybe with a large U.S. pharma partner, actually pans out, a deal that could bring in tens of millions in non-dilutive cash, how quickly could that kind of financial validation completely change the conversation around Nasdaq compliance?
Right. It moves from being about surviving the deadline to being about executing on the clinical promise.
Exactly. It could shift the narrative almost overnight. So that potential catalyst alongside the known deadline. It's definitely something worth keeping a close eye on as we head towards November.